Hello everybody, and thank you for joining us in conversation. This is the fifth in our Credabl webinar series. My name is David, I'm the CEO of Credabl, and I'll be your host today. So who is Credabl? Well, we're an independent non-bank lender for medical professionals. As individuals, we've been around in the market for quite some time, but as Credabl for 3 years. We're extremely passionate about what we do, and we've set up this webinar series to start a conversation about all things lending. We thought the best way to kick this off was to hear from some young professionals in our industry who represent the future of our industry. In our session today, we have a diverse panel of young professionals who have recently started their careers in lending. They work at a non-bank lender, a fintech, a digital bank, and an investment bank. We'll be finding out why they opted to start their careers in lending, their experience in the industry thus far, including during the COVID-19 pandemic, and their thoughts on what's next in the lending space. Before we get into it all, I just wanted to remind everybody that this is a conversation. We'll be having a good amount of Q&A time in the second half of the session. You'll be able to see the live event Q&A section where I'll be able to see any of your comments and questions, so please do post them there. In the live event Q&A panel, if it's not open already, you'll see a couple of speech bubbles with a little question mark. Just click on that button and you'll be in the conversation. For any mobile Android users out there, you may find a slight audio delay when you type into the Q&A, but the audio will return. Okay, so it looks like we're in full working order here, so I look forward to seeing all the questions for us to put the speakers on the spot later on. And let's get things kicking off by finding out why some of our speakers decided that lending was the right place to start their careers. Dean, you joined Credabl while you were still juggling a full-time uni schedule after a chance phone call with me. At the time, you were working at Afterpay, another preeminent fintech. Was there something specific that led you to start your career in non-bank lending, or was it simply by chance and circumstance?
Thank you, Dave. Well, in terms of starting my career specifically in non-bank lending, I would have to put that down to chance and circumstance. That being said, there was definitely an element of design involved that led me to this role at Credabl. At uni, I studied finance and realized that I was interested in starting my career in finance in some capacity, but I was particularly unkeen in going that road most traveled, which is at a large corporate, where you follow a structured grad program or a structured route to success. I've also always been passionate about entrepreneurship, innovation, and startups, and having been a part of Assetbacked rocket ship journey, having joined there as a 19-year-old, I was particularly encouraged by my own ability to contribute to the growth of a smaller organization, even at a young age. And so, Dave, as you mentioned, we did speak on the phone via chance phone call, and I believe it was in September 2018. And quite immediately, I was excited by the opportunity at hand at Credabl because it ticked both boxes for me, being that Credabl was a very young startup, but also it was ultimately a financial institution that required finance skills on a day-to-day basis. And I knew by joining and by working for you with someone with extensive experience in finance, I would acquire those skills in the role. So I guess going back to the question, I don't think I can say that I joined lending or non-bank lending by design. And in fact, going back to 2018, I probably didn't know much about lending at all, to be very honest. But I think it was my underlying passion about startups and innovation, my interest in finance, and the fact that I studied it at uni that led me to this role. And I think all in all, that message stands for other university students or other grads or anyone of a similar age or stage in their career to myself, is that, you know, the large corporate is not the only route to go to acquire technical skills. You can still do so at a smaller organization in the right environment under the right guidance as well, with the added benefit of also being able to be a big fish in a small pond and make a tangible contribution at a younger age.
Thank you, Dean. Harrison, in contrast to Dean, you started your career at Westpac, a financial institution that almost every Aussie is familiar with. You've since moved on to Zinja, which is one of Australia's fastest growing digital banks. What motivated you to start your career at Westpac, and what inspired the transition from there on to Zinja?
Thanks, David. Yeah, so I started off my banking career a little less traditionally. I was originally studying design and advertising and fell into a sort of sales role after that. And I really loved the the people and relationship building aspect of that. But ultimately I was looking for something with a little more career opportunities to it. So I thought banking seemed like a really great way to go. So I joined Westpac over in New Zealand and kind of learned the ropes there. And after a year or two, I got the opportunity to move over to Sydney and try it on the other side of the ditch as well, which was also a great experience. Now, after some time there, through just chance encounter, I got to meet someone at Zinger who said, "Hey, do you want to help start a bank?" And obviously, when someone asks you that, you kind of initially laugh, but then you think about it and think, oh, well, you know, you only ever get an opportunity like this maybe once in your life, if ever. So I looked at things like, the culture they were trying to set up. If you go to our website and check out our 10 golden rules, the first one is no dickheads, which is fantastic and, really makes a big difference when you're working day to day and, ultimately for our customers as well. But, the opportunity to build a lending program from the ground up and take part of that, use technology that's never been seen in the fintech industry before, and just link yourself to something much bigger and very new. It was just a really exciting opportunity that I couldn't pass up. So, yeah, it's just been a fantastic experience and I'm loving.
Great. Grace, you're currently at Deutsche Bank, a global investment bank with divisions across the entire spectrum of financial services. I understand you started working in asset-backed securitization. That's quite a specialized field, and I believe you worked in that division ever since. Was this a specific choice that you made to be starting out in asset-backed securitization? If it wasn't by design, how did you find your way into the industry? And also, what were your first impressions? Have those views changed now that you've got a couple of years under your belt?
Thanks, David. I think in response to your first question, it was definitely the latter. I began as an intern at Deutsche Bank, rotating in their sales teams. And at the end of my internship, I spent my final day with the now head of the asset-backed securitization division in Australia. DB in Australia is a non-ADI, so our securitization platform consists of a capital markets platform and a private warehouse securitization platform. I think similarly to the comments mentioned earlier, when I was thinking about a career in finance, I wasn't thinking as granular as securitization. I think that some of the rhetoric which we use to describe securitization, particularly post-GFC, is not particularly conducive to attracting or retaining young talent. I studied economics, and I think securitization was probably one slide in a lecture about the GFC. In response to your last question, I think contrary to some of the Hollywood portrayals of securitization, I found the industry to be highly collaborative and not competitive. That's compared to both my expectations of the industry, but also some other financial markets that I've seen. I would also say that it's highly relationship based. I think that's particularly true of Australia, given the size of the market and also our experience during the GFC. And then finally, I would say to echo your sentiments about it being highly technical and highly skilled, it is a very challenging workplace, but that makes it also very exciting.
Thank you. Claudia, you also started your career at an investment bank at Morgan Stanley, and you recently made the great decision, though I'm quite biased there, to join Credabl in the non-bank lending space. What led you to make the shift from a clearly very prestigious and well-respected financial institution to a relatively new non-bank lender? It would also be great to get your thoughts on how it's been working in the industry so far.
Yeah, thanks, David. As you said, I joined from Morgan Stanley. So I joined Morgan Stanley straight out of university. I was in the mergers and acquisitions team for about 2 years. I really enjoyed my time in investment banking. I think it's a fantastic place to start your career, probably for 2 key reasons. I think it teaches you a lot of skills really quickly. For instance, I was building quite complex financial models within my first year. And secondly, I think it just gives you a really broad range of experience. So, for instance, I was working across a number of different industries, such as finance, technology, healthcare, transport and government, and also just across a number of different types of transactions as well. So IPOs, debt raisings, and M&A. So I think it just gave me a very wide breadth of understanding very quickly. But probably what I most enjoyed was understanding a company in detail, and then helping that company with large-scale projects that were impactful to the business. And I found that I actually wanted to have a bit more of a long-term impact on a company rather than a short-term transactional capacity. And I also found deals involving financial institutions are very interesting. So a job in a nimble, fast-paced company like Credabl sort of ticks all the boxes. And now I'm in the Treasury and Special Projects team with yourself and Dean. I think this means I just get amazing exposure to all aspects of the business and get a great amount of responsibility. And we're just focused on building the business with similarly motivated people, which makes the job very different every day and makes it very exciting and enjoyable.
Thank you. Haim, you transitioned from EY to iDutch. I'm sure many of our listeners have heard of EY, but many may not be familiar with iDutch. Tell us a bit about your experience there, and if there's been anything that surprised you about your new role and the industry, having moved from a big corporate like EY.
Yeah, look, I mean, iDutch is a fantastic, fast-growing new fintech, and it's excusable to not have heard of it so far, but in a few years, if you haven't heard of it by then, I think then there's going to be something wrong, because we are growing very quickly, and we work with a large network of referrers, be it brokers, accountants, lawyers, who use our marketplace to match their deals to very specific non-bank lenders that align to the metrics of the deal, and then we auction that off in a competitive marketplace. And you know, it's a really exciting role to be a part of, coming from a place like EY, which was a fantastic way to start my professional career. You learn your bread and butter there, and you really grow as an individual technically. But now this is a really great environment to be in. And I think the most surprising thing for me, especially coming from such an institutional background, and it might have been quite naive, but I didn't realize how effective private lending could be. I thought it was only a stop you go to if you couldn't get banking finance. But I slowly have learned that non-bank lending can be a very effective way to maximize your risk-adjusted returns, because it's much faster, they're much more flexible, and you don't have to put in as much of your own equity. So because the leverage is higher in the non-bank lending space, you can put in less and obviously maximize your return on equity if you know what you're doing. So that's probably been the most surprising thing for me, and I'm loving it so far.
Great. Harrison, I suspect you have similar insights to share about your experience working at a digital bank where the environment is notoriously fast-paced and innovation-centric. We often use these words, fast-paced and innovation-centric, but it would be great if you could give us some specific examples of or key areas where this comes to life at Zinja.
Yeah, absolutely, David. So, I mean, when it comes to being fast-paced and agile at Zinja, I can honestly say it's top-down all the way through the organisation. Everybody has to be able to deal with constant changes, moving very quickly, because nothing is really certain, and we're often having to sort of pivot and go in new areas that we weren't anticipating when we first set out. But to give you some specific examples of how that kind of comes to life, the first 3 months of us launching our savings account, we raised 500 million in deposits with 30,000 customers. We got a banking license in 2 years. We launched a core banking system in 3 months, which I think is an SAP record. And I believe we also have a record for the fastest deployment of a digital wallet system with Google and Apple Pay as well, which we did in 6 weeks, from the first inception, contract signed through to having our customers using an app. So, you have to be able to really throw yourself in the deep end and swim, not sink in that sort of environment. And it is very challenging sometimes at the sake of your sleep and sanity, but it's also really rewarding, and you're forced to learn a lot of skills that you never thought you'd get the opportunity to. You get exposed to, all of these different roles and things that, you'd have a whole team of hundreds of people doing at a bigger organization that you suddenly become responsible for on your own. So not many places get to do that, and it's just it's a very satisfying way to work if you can deal with it.
Thank you. It definitely sounds like there's quite a lot going on over there. I think it would be good now to move on to talk a little bit about the pandemic. It's the elephant in the room. So Dean, you've seen quite a lot in your career already. You started out with our business prior to the launch of our warehouse and through our explosive ramp-up growth phase. And now we have the COVID-19 pandemic. COVID has in particular changed the way that we live, work, and the way that we approach risk in our lives. As a young professional in the earlier part of your career, I'd imagine that you've learned quite some important lessons in an extraordinary short period of time. I'd be interested to know how COVID-19 has impacted your role at work, and if there have been any significant takeaways that you'll carry forward in your career from the lessons that you've learned during this unprecedented time.
So as you mentioned, Dave, I did join Credabl back then, and it was a very, very small business, and things looked very different. And since then, we've grown quite a bit. You know, we've expanded our national footprint. The team's grown exponentially. We've got different products in different markets, and of course, our loan book has grown rapidly. And being a part of this rapid growth is very exciting and very energizing. You know, you've got everyone's kicking goals on the regular. The team is all committed to the same cause and growing and developing at the same, time as the organization does. It's this sort of experience and this sort of environment that I was after when I was leaving Afterpay and joining Credabl. And so a lot of what I do at Credabl on a week-to-week basis are what we like to call special projects, which are these projects that we put in place that directly contribute to the growth of our business, to the growth of our brand, and to the growth of our product offering. But then comes along something like COVID-19, where immediately you're forced to turn your attention away from these grand, sexy projects and put them on the back burner to turn your attention towards consolidating your existing infrastructure. Now, I remember when COVID first hit, it was quite disappointing because, you're halfway through a project or you're almost close to launching a project and you're forced to stop and pause and, deal with things like waves of hardship applications. But as I sit here and reflect now on the opportunities that's come my way as a result of this pandemic, I'm actually very grateful. And I think the biggest way in which COVID impacted my role at work was that it actually gave me more accountability and responsibility for what I do. And to be honest, I think that's because when there's many fires burning, you need all the firemen you can get. So as the crisis came about, you threw me into the deep end, Dave, and I was immediately dealing with key external stakeholders at a higher level than what I usually do. And I guess, as Harrison mentioned, when you're thrown into the deep end as a young professional, you're forced to swim and you're forced to learn and you're forced to level up. And that's definitely the experience I had during COVID. So I guess back to the question in terms of takeaways and lessons that I've learned from this period in time, for me, there's three. The first one is our personal lives and our business lives are not immutable, especially in business when things are going well and everything's on the up. You almost feel the sense of invincibility, but then something like COVID-19 comes and you've got to kind of rethink everything. Secondly, and this follows nicely off my first point, is that we have to be prepared for such black swan events and not become complacent and have a plan for when they hit. And certainly that plan needs to involve, some composure and sharing the load amongst a team, which my seniors definitely did, which I admire and which I saw work very effectively. And lastly, which is more of a life lesson or a personal lesson, is that, in any circumstance, whether it be positive or negative, and certainly COVID was a negative circumstance, I guess remain positive, because you never know what, alternative opportunities may come your way or what silver linings may come your way from the unusual circumstances.
Thanks, Dean. Grace, while Dean's experienced the impacts of COVID-19 through a Credabl lens, your role has probably allowed you to see more broadly how COVID-19 has impacted the industry and the lending landscape. Has COVID-19 changed your role at Deutsche Bank? And do you have any interesting insights to share with us about the impacts the pandemic has had on the local and international credit markets or on your clients?
Thanks, David. I think there are two quite obvious large-scale impacts in the industry. I think the first is around our treatment of hardships on a go forward. I think that we will start seeing the question of hardships and historical hardship numbers pop up in numerous due diligence sessions with investors. I think the other one that I would say is that the reporting requirements, which we're expecting of our clients, are increasing at a rapid pace. And I think the expectations that we have, particularly on their systems, will continue to grow. I think probably the more interesting second order change that I've seen in the industry is a reflection on the importance of extending lines of credit, and that applies both to our clients as lenders, but also ourselves as financiers. I think it's been a highly collaborative environment between ourselves and our clients during the coronavirus pandemic. I think that it has been very borrower-centric, and that echoes my sentiments earlier about the nature of the securitization industry and the lending industry more broadly. In terms of your latter question about the impact on my role as a junior, I think it has been a highly formative period. I agree with Dean that your responsibilities definitely do step up when they need more men on the ground. And I think that it parallels what we've seen or what I've heard from my seniors who have worked through the GFC. So I think that we'll look back on this period as, a highly formative period about our learnings about the lending environment.
Thank you. Chaim, we've spent some time talking about the experiences you can have in lending, but we'd be remiss if we didn't talk a little bit about the risks and challenges as well. In your time at iDutch, can you shed some light on any challenges and risks that you've faced as a business, or any risks and challenges inherent in the deals that you facilitate?
Yeah, look, there's many risks, and I think the whole essence of the game is to manage downside risk. That's what we're here to do. That's what the borrower's looking for, and that's what the lender's looking for. But overwhelmingly, time and again, the biggest risk I see is that the risk that the lender in the non-bank landscape is not reliable, it's not credible. Because in the banking landscape, it's quite easy. You've got your household names, and now these newcomers like Zinja and a few others are making a name for themselves. But in the non-bank landscape, it's very difficult to tell the difference between a very reputable wholesale fund that has millions and millions and millions of dollars to lend, and two schmucks in their garage who are just typing on a nice website, and they have no intention to fund the deal, and they just want to take big upfront fees. So that's the risk from the borrower's perspective, and that is really what iDutch does best. Is we navigate this quite unsettling landscape for a borrower who might find it intimidating, and we match them with not only the best suited lenders, but the best reliable suited lenders for their deal. Now, COVID's been a blessing in disguise for us, and it's been a challenging period for everyone, but it's been a blessing in disguise for us because the deal volumes have skyrocketed. I'm sure we'd all attest to the fact that banks have tightened up in terms of who they're lending to and how much they're lending, which means there's more deals for us and for what we do. And the challenge has been finding the lenders that are just talking and that are not really reliable compared to the real lenders that want to do business. So we've reviewed over $500 million of loans this year, and we're due to settle in the next few weeks just shy of 100 million in loans. So from the borrower's perspective, that's what we offer, and that is the risk we see come up time and again. And then obviously there's your other risks about valuations not stacking up and risks that have to do with the deal itself. But a much more fundamental risk is that risk that the lender is reliable.
Thank you. So on to the future of lending. Claudia, another significant trend that we've seen over the last few years, both in Australia and across the world, is the rise to prominence of non-bank lending and alternative financing. Why do you think this trend has so much momentum, and do you think this will continue into the foreseeable future?
Thanks, David. Yeah, I agree that there's definitely been a rise in the non-bank lender and tech-enabled banks in Australia and around the world, and I do think it's a trend that is set to continue. I think particularly in lending, there's a move towards specialisation, or maybe the creation of niche lending markets with their own nuances. For example, at Credabl, we provide tools of trade lending or lending for business purposes, specifically to medical professionals, so dentists, doctors, vets. So all of our products, our sales team, our business, we're all focused on the one sector, which I think allows us to understand the clients a lot better and provide them with advice specific to them. For example, doctors are often seeing patients during traditional banking hours of maybe 9 to 5. So our consultants make themselves available at times that are more convenient for the client. So either visiting them at their practice or visiting their homes after hours or on weekends, although that's maybe a little bit less so now given COVID. But I think it's this deep understanding and specialisation that we have in the industry that allows us to do this and makes us and other specialised lenders real contenders in the market. And I think what this really boils down to is that lenders are trying to understand their clients better and provide them with a niche and unique experience. And I think that really resonates with the client. I think it would resonate with me that, we want to feel like we're getting a personal experience or a company understands your specific situation. So I do think it's definitely been an area of growth in recent years, and I think everyone expects it to continue into the future.
Thank you. Thanks, everybody. I think it's now time for our Q&A, so please do keep sharing any questions that you have, and I'll try to get to as many as I can in the next 10 minutes or so. But let's start off with you, Harrison. With the recent proliferation of neobanks and non-banks in Australia, how well do you think these challenges will do against the traditional players on the key metrics of lending, being preservation of capital and delivery of a responsible risk-adjusted return?
Yeah, well, look, I obviously think we're going to do very, very well. That being said, you know, if you look at all of the major banks in Australia, you know, we're talking about billions and billions of dollars worth of mortgage-backed securities that they've written for themselves. So it's going to take us a long time to catch up to that, or maybe not. But you know, how we will do that is through you know, our disruptive business model and technology. So you know, when I talk about our technology, I can, you know, confidently say that we're already using things that it'll take a lot of other organizations many years to implement, and even longer to, you know, decouple from their existing setup. So, you know, to frame that on the question we've got here, you know, we can use our cloud-based solutions to collect and analyze data on our users in ways that other banks just can't, because of the way that it's very segmented and kind of restricted in the way that they can access it. And what we can do with that is use it to make real-time, data-driven decisions around the way that we lend to people, and of course around risk and credit decisions as well. Which is a lot harder for older, larger organizations to make. So, you know, I think when you couple that with our desire to obviously be more ethical in the way that we do business, our ability to run our organization at much lower overheads than traditional banks, you know, we can benefit from returns that are more ethical for us and for our customers, while being easy to acquire and much easier to manage as well. So, you know, to look back, I would say that, you know, we've taken $500 million in deposits in the first few months of business. So I think it's pretty clear that Australians definitely believe in this model and want to participate in it. So it's going to be a pretty telling path and a very interesting one ahead of us. And you know, I think I just wrapped it up by saying if the big four are Blockbuster, then that must make us Netflix.
Thanks, Harrison. Dean, one for you. I've noticed there's been a tremendous amount of stress in the market, and each lender has a different approach to the hardship faced by borrowers. What are you seeing from your business in this regard?
Thanks for the question. Certainly an interesting one, and a very interesting experience for me, as I mentioned before, at the onset of COVID, where you had this wave of hardship applications come through. I think all in all, I'm very proud to say that Credabl dealt with it very, very well. And I think because we're a small non-bank lender, we were very well placed to deal with the hardship applications that came through. The contrasting experience is dealing with a large incumbent bank where they have very much blanket approaches and follow a automated, system. But for us, we're able to have those, direct personalized conversations with our clients, which is obviously very, very important because, what a lot of borrowers don't know and what the media doesn't convey when they are creating that frenzy to call up your bank and freeze your payments is that it actually costs you more money over the long term to freeze your payments. And if you're able to service your loans, then you should very much do so. So I guess for us, the first piece was educating our clients that, if you are able to make your loan repayments during this time, then please continue to do so. It is definitely cost efficient for you. And then secondly, we explored the option of giving them an alternative financing solution that would allow them to meet their existing obligations. Again, that was another cost-efficient solution. And then lastly, if the client genuinely believed themselves to be in hardship and they wanted to put their loans on freeze, then we would approve the application in line with industry practice.
Thanks, Dean. Claudia, one for you. Can you share some examples of innovations and innovations in lending that you've seen from your time at Credabl?
Yeah, of course. I think generally Credabl is quite a young brand and we're quite tech-enabled already. But as someone in the treasury team of a non-bank lender, I think one of the key ways we can innovate is coming up with new ways to access capital. So given we're not supported by deposits or, large balance sheets like a lot of banks, we have to find other ways to fund our loans. So, non-bank lenders typically rely on other financial institutions to provide this funding through, various funding vehicles, such as, for instance, a warehouse. But I think something maybe interesting that we've been seeing in the market is the increasing prevalence of peer-to-peer lending. So be raising money directly from individuals to fund the loans of other individuals, or in our case, sort of small businesses and medical professionals. And I think the possibilities are really endless here. We've certainly given thought, as to how we could incorporate something similar to Credabl. For instance, you could even have something like an idea where doctors fund doctors. So maybe doctors in, further in their career who have some money and want to invest in the next generation of doctors could pay that forward. And so we're constantly thinking of different ways to innovate and improve our business, as well as always help our community of medical professionals.
Thanks, Claudia. Grace, one specifically for you. Person asked, I'd like to know about your experience as a young woman in finance and any advice you may have for someone who's just entered the industry.
Yeah, I think it's a great question, and definitely one that I had before entering the market. Fortunately, I had a lot of women to ask because my team is predominantly women, and I think that's definitely something that has surprised me about the securitization market more broadly. I think it is uniquely prevalent in women, that they connect with the industry and that they do end up dedicating their work to securitization. I think in terms of advice that I would have for someone joining the lending industry, similar to what Harrison mentioned earlier, I think finding a lending business which aligns with your values, similar to what he had mentioned, how he aligned with Ginger, I think that definitely makes sense. I think be conscious of the size of the securitization market that you're entering into. As I said earlier, the Sydney market is quite small, so I think be aware of that. And then thirdly, I think the securitization market is very technical, so don't be afraid to learn on the job.
Thanks, Grace. Hein, one for you. Where do you see the industry in 5 years, and what are the differences between this vision and where you might have thought the industry was going to be pre-COVID-19?
That's a tough one, because none of us have a crystal ball and none of us obviously could have predicted COVID-19. I think broadly, long term, I don't think that there's going to be much change to what I thought the industry would be before COVID hit, and that is a much more transparent space. I genuinely believe that there's a lot of inefficiencies currently in the non-bank lending space around what the borrower wants and what the lender's prepared to give. And I think there's a lot of fluff that goes on, back and forth, this and that. Everyone's got their emails coming back and forth, and it just gets lost, and it's very inefficient, and it just doesn't work as effectively as I think both parties would like that to be. As I said earlier, I think that there's a very big lack of transparency as to who the real players are in the non-bank space and who's, brokers disguised as lenders or lenders that aren't real lenders. They just want to grab fees. But also something as simple as just, processing information. Now, that's tough for everybody. That's the challenge across all industries around the world. How do we effectively manage data and whatever? And that's a whole nother webinar that we could discuss. But I think that the industry is going to go to a place where, especially for the borrower, there'll be a lot more transparency around who they're dealing with. And then from the lender, there'll be more transparency around who they're dealing with as well. So what the borrower's situation is, instead of being able to sort of muff over things and gloss over certain bits of information you don't really want the lender to know, vice versa. The lender can muff over things the borrower doesn't want to know. It'll just become much more efficient. And I think that was true before COVID. We're seeing that. That's what we do. We're at the nexus of that. Our competitive marketplace allows lenders to basically access a data room where everything about the deal is served to them on a plate, which makes it a much more efficient system and allows them to really go for the deals that they want to, full steam ahead. And then in that competitive way, they put their best foot forward. And it's not always just on rate, it's on LVRs, and it's on other things, because if one lender is willing to go to a higher LVR and another lender is willing to go to a lower rate but a lower LVR, you can't tell a borrower what's a better deal. That's for them to decide. But to answer your question and to summarize it, I think there'll be a lot more transparency and efficiency in this market, and that's a great thing.
Thanks, Haim. I just remind everybody listening that if you have any other questions, please do put them in the Q&A and I'll allocate them accordingly. I've got one for Harrison. Harrison, when you think about taking a job and compensation, you know, there's the traditional concept of money and being paid potentially a salary and or bonus, but there might be other things in terms of your overall compensation, like the task autonomy that you have in your job, the impact you're making, and other things of that nature. Could you talk to us a little bit about how you think about compensation for you and whether that factored into your thinking when you went to join Zinja?
Look, that's a really interesting question, actually, and it's obviously going to differ a lot depending on who you are. It's very subjective. For me, I think, look, I'll touch back on the whole concept of it being fast and agile, which means that you get an opportunity to develop yourself professionally in ways that you just never would otherwise. So I'm constantly doing analyst style work. I'm doing customer service management, reconciliation, finance style things, just opportunities that, grad program or mentorship program in the world could probably offer. So for me professionally, I get a lot of satisfaction from that. I'm in a much better place now than I was a couple of years ago in that sort of space. Of course, when it comes to finance, which is one thing that everyone's really keen on, the opportunity to get in early and have options and have those kind of come to fruition in the future is a great incentive as well. You just have to look at some of the people who came from out of PayPal and Facebook and those original sort of startups over in the States and how well they're doing now. So, those sort of things are a nice carrot, but I think, if you're the sort of person who's going to succeed in a startup environment, you need to be someone who's going to be there as much for professional development as financial.
Thank you. Dean, a question for you. Obviously, as people do things over time, they get a greater mastery for whatever it is they're doing. There's that old cliche, practice makes perfect. Given that you're in the earlier stages of your career, how do you navigate various projects and tasks that you have to do in your job where you may not have seen that request before, or you may not have had a specific experience that informs how you'll tackle it? How do you sort of set yourself up to succeed?
Thanks, Dave. I guess for me on this one, it is always having an understanding and a grounding of where you're at and never being afraid to really reach out and ask, someone that's more senior than you for advice or for help. And I guess for me, I've been very lucky in my time at Credabl to be managed by people that are always willing and able to have these conversations with me. And not even the people that manage me at Credabl, just generally the organization as a whole. If there's ever something that I don't know, which happens quite frequently, hopefully less over time, I'm more than comfortable and feel more than comfortable to just reach out to the right people and ask for help. And then I guess from then on, when I learn something or I acquire a skill, I work on, perfecting it or mastering it. And I guess endeavor to not make the same mistakes twice.
Thank you, Dean. Grace, back to asset-backed securitization. I'd imagine when you're around the dinner table trying to explain a bit about what you do, you might have the risk of people having their eyes glaze over or feel like maybe it's a bit too financy. But in a nutshell, can you describe to us what asset-backed securitization is and why it's an exciting thing for you?
Thanks, David. I think I always like to start. I think it's quite easy to explain asset-backed securitization because you can touch the asset, and sometimes you're working with quite fun assets, particularly non-residential loans. So you might be looking at cranes or forklifts or something a little bit quirky. And so I think they're always the way that I try and position it, particularly if I'm explaining it to, for example, my grandma. I would use something a little bit exciting, or her own home loan. And I think that tends to be a bit more relatable. And the way that I like to explain securitization is that you are effectively looking at a portfolio of diverse receivables and tranching that into various levels of risk that matches the risk appetite of the investor. I think that's probably the simplest way to explain it. There are obviously a lot of complexities when it comes to securitization, but I think that's at its core what it is. It's a matching of risks to risk appetites. So I think what makes that exciting, aside from some of the quirky assets that I look at and a greater knowledge of different types of forklifts, I think is that you are providing credit to, ultimately you're providing credit to lenders and to borrowers. And I think that that's what makes it exciting. You're providing access to credit to touch on Haim's earlier points, to people that may not have access to credit from the major banks, or people that want a different option. And I think that that is quite a fulfilling role to have.
Thanks, Grace. I think we've got time for one more question. Claudia, obviously when you started out at Credabl earlier this year, you had expectations about the job, one of which was probably coming into work, sitting in the office with your colleagues and, learning about the job. As it's transpired, you've actually spent more time working from home than working at Credabl in the office. One of the benefits, I'd imagine, is that you no longer have a commute into work for the most part during your days, and there's probably a little bit more sort of personal time for you to sort of engage in other things. What's been filling your time? Are there any interesting podcasts or other things that you've sort of got stuck into with that extra time that's come back to you?
Yeah, great question. I think I definitely have a little bit more time now. The commuting is saving a little bit of time, although we've started up a little bit of a competition in the office or amongst everyone on creating steps and making sure we all keep our steps up. So I'm trying to get into a bit more walking, which is more difficult than it sounds. But other than that, just getting back into a lot of stuff that I really enjoyed previously. So a lot of reading and writing. Podcasts are very great on morning walks. But yeah, obviously catching up on all the shows as well. Very addicted to MasterChef. So there's plenty to occupy my time now. But there's still a good amount of work to be done. And it's just, I actually find it a very exciting time to be part of a business like Credabl, just because, it is so nimble and we are able to quickly adapt to such strange situations like COVID. So even though it's working from home, it's still a great opportunity and a great role, and I've thoroughly enjoyed it.
Thanks, Claudia. We just have one more question from Blake Young. This one I'm going to throw to both Claudia and Grace. So maybe Claudia, you can start, and then Grace will ask you to sort of finish off. But what are the key ways in which large banks analyze and assess early stage lenders, such as Credabl? What are the key risks and success factors that you look for before you proceed?
Yeah, good question. Well, we're obviously, as you said, Dave, we're quite new as a business, Credabl. So although a lot of the people that we have, a lot of our staff is actually very experienced in the industry and have just, such a wealth of knowledge, we are a young business and it is hard to prove yourself. So I think, something like COVID actually gives us a fantastic opportunity to prove that we are a really great contender in the market and we can make it through something like this. If we come out of it having had little to no losses, which, at the moment we're at that stage, we are in a fantastic position to say, to look back and point to our track record and just say, this is what we can do. This is how we can manage everything. And I think that goes a really long way to proving yourself in the industry.
Thank you. Grace, perhaps you can respond to some of that from your perspective at Deutsche Bank.
Yeah, sure. I think one of the things that I enjoy most about Deutsche Bank is the flexibility that we have to be able to explore new lenders such as Credabl. I know that there are institutions, agencies, etc., which will only accept lenders that have a certain number of years of historical experience. Whereas I think that some of the new financiers such as Deutsche Bank or some of the financiers that are looking at places now are thinking about different ways to assess risk. And I think that largely you can look at both losses and originations, and if there seems to be either comparables or a strong business case, I think that's a good place to start.
Thanks very much. Well, it looks like our time's up, so thanks to everybody for your time today. We find that lending is such an important part of our and many businesses' lives, so it was a pleasure to hear from all of our panelists this afternoon, and we appreciate the time. If anybody has any more questions or messages, please do continue to use the live Q&A, and we might try and address those as we can, but otherwise feel free to use the live chat on our website, and we're always about and can continue the conversation. We hope you enjoyed it today. Have a great rest of the week, and we look forward to seeing you all soon.